Deere shares are down almost 1.5%. Now, if you listen to the numbers here, it doesn't really explain why the shares are down. So stick with me here for a minute. The company saw global net sales and revenue jump 12% year over year, and the farm equipment maker also set its profit guidance above expectations for 2023. Some of the other numbers look good as well here. The company's earnings per share also beat estimates, and the company's CEO, John May, said fundamentals are expected to continue fueling solid demand for our equipment, supported by a strong advanced order position. So, why are the shares down this morning? It looks like there is some concern. I've been looking at some of the analyst commentary that maybe there's concern about a peak in the agricultural cycle here, and perhaps that is what's going on with the weakness in the shares.
Interesting. I'm looking at some of the industry outlook for fiscal 2023 that the company had published within its press release, accompanied with the earnings results here. And it's looking, at least in the agriculture segment that we're thinking of, large ag, that's looking, and they're expecting that to come in up to about 10% there. Small ag and turf, expecting that to actually be down by about 5 to 10% in their forecast here. And you think about what has been fun to talk about quarter in, quarter out, which is production and precision ag, precision agriculture. I don't know, I was trying to be hip with the lingo there and how the industry discusses it.
I think that's more professional, right? Versus the small ag and turf would be more small, maybe landscapers, just your little power mower for your lawn, maybe.
Well, no. I mean, according to Home Depot, I've got to get the new robotic mower, the RoboFlow or something like that. We'll figure that out in the name of it later. I've got it in a tab somewhere. But production and precision ag, you certainly do see that business-to-business correlation as it comes through some of the results there, and particularly operating profit up 38%, in that represents the lion's share of their revenue that they see come in, which for this most recent third quarter was about $15.8 billion here. Production and precision ag, that percentage of it, or at least the makeup on a dollar basis, $6.8 billion worth of it. So net sales up there by about 12%. No doubt investors going to be paying close attention, not just to what happened in this most recent quarter, but also, to your point, what analysts are expecting that real forecast to perhaps marry up to.
Yeah, and just to mention a couple of other things, in that small agriculture and turf segment in particular, the company said all of its gains came from higher prices because volumes were down. The other two segments, that is construction and forestry and deep production and precision, both of them saw improved volumes as well, but not in the small area. So that's one area to watch as well when it comes to Deere.